please. We're going live.
I'm live.
And hello everybody, and welcome to this week's weekly update. Ask Me Anything. Today I'm joined by Sofian. Thank you for joining us this morning in Berlin, where it's really hot and clouded. Also on the line is Alisher, AK at GeoBlocks, whose camera is still not working, so that's okay. And today we've got a really exciting session. We want to talk about a few subjects. I feel really the news flow, the deal flow, the activity is absolutely staggering, both on the difficult situations, stuff dropping, but also really interesting new projects doing really well. Let's dive right into it. First subject I want to talk about is Gucci. Gucci, to have a little bit of luxury in the morning, is going to start accepting crypto. I think it's a really cool example of what is going on in the market. So they're going to start accepting crypto at the end of May. 10 cryptos will be accepted. Stable coins, we'll talk about this in many details shortly. They're going to accept Bitcoin, they're going to accept Ethereum, and then also some alternative coins, Shiba Inu, Dogecoin. So certainly taking also a very liberal approach to the types of cryptos they're going to be accepting. Gucci is probably one of the larger or more mainstream luxury brands coming in. They're part of the French Kering group. So I'm expecting the luxury market to be at least on the forefront of that move, with other brands like Saint Laurent, Bottega Veneta, Balenciaga, all part of the Kering group, probably using this and watching this as a pilot project and seeing if there's any other integrations possible, and how it's doing. I think the places are going to be mostly in the US. I think it's LA, it's Las Vegas, it's Miami, it's New York. So yeah, not in Europe just yet, but there are some other brands that have tried this quite successfully. I think of Off-White, for example. That's a more younger targeted brand. They are already offering crypto payments in London, Milan, and Paris. And then in the luxury watch space, we had Frank Miller, we had Hublot, who've even done special edition watches that you could only buy using Bitcoin. I'm thinking of, I think it's called the Mecca 10. They were sold out at $25,000, and they're now obviously trading much, much higher in the secondaries. I think there's 2 watches for sale on Chrono 24 or something for 125K. Clearly showing that there is a little bit of a pop culture item to that as well. But it's becoming more and more mainstream. Any thoughts about this, guys?
Well, I think obviously, and we see it across corporates, the adoption of crypto as a payment is huge over the last year, I would say. But what my sense is, and this resonates a lot with what Tesla announced last week with regards to digital assets. The use of smart contracts. That's really the next frontier, I think, for the corporates, but it just makes business sense to first incorporate the more simpler tokens within the blockchain and to get the payment infrastructure right. So and I think if we talk about Gucci, it's huge conglomerates behind it that need to shift also the way they manage data. So it's really a process that, in my sense, will not just stop and will certainly take a few years to unfold.
Yeah, I think I agree with you. First, you start with the payment integration, the stuff that is already adopted and has an immediate impact, so to say, and forces your organization to adapt. But then, as you say, the smart contract is really where then the virtual identities come to play. We've got a lot of internally conversations about how NFTs can enhance products, how can they create new use cases ultimately for the shops. So it's super interesting on that front, and that's that debate. You start with ERC20, which is a typical tokens, your bitcoins out there, and then you move into ERC 721s, which are the smart contracts, etc., etc. So really cool to see that evolution actually happening. Yeah, I fully agree with you. And sorry about that. Obviously, we're live, so I had to close the window. I want to move to the next subject here on the agenda. Goldman. Let's talk a little bit about Goldman. They've been super active in the crypto space on various fronts. I think about a month ago, they had an SEC filing, for example, to offer access to Ethereum for institutional clients. There's a fund that they're partnering up with, so it's called the Galaxy Digital fund, and it's attracted a lot of interest, obviously, from institutional money that's looking to diversify. Obviously, crypto has not had a great run in the last couple of months, but then again, a lot of stocks suffered as well, and you're kind of also looking for opportunities probably to enter the market. I think just tactically speaking, a lot of people are probably looking now that stuff has dropped 30-50% in the last couple of months. Might be now the time to at least get set up to be ready to strike when the opportunity comes. But the one I want to really talk about, and that kind of got overshadowed by the huge land sale we saw last week, is the Bitcoin-backed loan that they did, and it's really a landmark deal, I think. So that a main Wall Street bank does this kind of structure. So over the last couple of days, we found out that the counterparty to that trade was Coinbase. They've raised dollars against a secured facility. We don't know the notional of the whole deal, but what we do know is that it was the collateral is about 4,500 Bitcoins, 4487 to be precise. That was about $170 million at the time. So I think it's fair to assume anywhere from 500 million, maybe slightly more, in terms of the actual notional that got exchanged there. I heard on the street that it's between 6 and 7% yield on that paper. Really interesting deal. Also, us coming from the banking background, talking a lot about capital requirements, the risk weights for these type of trades and these type of assets. If you want to keep them on the balance sheet, they're marked up by 1,250%. So it's a really meaningful impact on your capital requirements, on your balance sheet, and how you want to deploy it. So you can't just do this willy-nilly, so to say. If you want to put this into number, if you want to keep an 8% capital adequacy requirement ratio, you're going to have to put $1 down for each dollar of Bitcoin you put on the balance sheet. And that's meaningful, right? For a business that needs to scale by having these types of leverage positions as a Wall Street bank, right? You're going to be looking very deeply into these type of constructions. And then on top of that, I think what's super interesting is that the entire market has been tanking, right? The notional or the collateral is, already 30 million underwater. And then, I don't know what the covenants look like on this type of situation, what has happened, but it will be certainly a good test for this type of new products, and then going into straight this kind of scenario afterwards. Sophie, do you have an update maybe on Coinbase earnings? I saw they missed revenue. 1.5 billion was the estimate. 1.17 is what it came at for the first quarter. Everything's down, users, trading volume. What's your take on that?
Well, I think, I mean, overall, the equity markets are very soft. We also saw other, yeah, shining stars from last year that were kind of these stay-at-home stocks that really suffered with this year's first earnings. I'm on the Coinbase subject. I think we really need to also differentiate between the company Coinbase that is achieving also a lot. You mentioned the loan with Goldman Sachs. But there are also other players out there, and what comes as a bad news for Coinbase in terms of market share comes at as good news for the decentralized exchanges that exist and that have, especially this week, also had a lot of transaction volume. This is ultimately also a link to market dynamics, the risk assessment between different tokens that market participants do, and at the end of the day, also transaction fees that Coinbase internalized as an exchange, but that decentralized exchanges have the capacity to spread through the network. So here, if we look at Uniswap, for instance, the last couple of days have really been huge in terms of transaction volumes. My guess is obviously that following the UST, so the Terra USD stablecoin collapse, people are shifting to the decentralized coins, so Ethereum, also Bitcoin, that is used by the Lunar Foundation Guard to defend the peg. That's also interesting. So we really see the market changing in terms of allocation. And this is not only due to a single event, although it's a bit of a fortunate coincidence. We did also hear yesterday from Janet Yellen that further regulation on stable coins, so the way in which the dollar value of a coin, or be it the euro, any major currency, how the peg is done, will be scrutinized. And here, for the circles, for instance, with that have the USDC out as another big stable coin, this means also a closer look on how peg is managed, how tokens that are supporting the peg via the miners' activities are governed, and ultimately also how reserves look for all these companies that have the stable coins products. And here again, if we look at what you mentioned on liabilities that banks are taking on, these are all paid one-to-one by the banks. So these are really also not attractive for investment banking or any type of lending bank, because again, you have to back any crypto, so Bitcoin, for instance, with the equal amount of US dollar. So this is a lot of change, I think, a lot of market color that is being absorbed by the crypto traders also, and that we directly saw came in favor of decentralized exchanges. If we look at the smart contracts, again, we should not forget that on 1st of May, OpenSea, which is one of the major marketplaces for NFT trading, they had their all-time daily transaction high. So this is all also showing that money is still flowing on the decentralized space, and shows kind of a market testing of the business models of the centralized exchanges, such as Coinbase, but also Terra. And maybe we can take some time later on to talk a bit about Terra and what is happening to this coin, as overall it's a very solid project with aspiring goals and also a lot of great minds behind it.
Yeah, I want to. It's a beautiful transition into the Terra and the Terra USD collapse. Just to put stuff into perspective, so we've covered it a little bit on our TikTok, but over the weekend, the stablecoin UST started losing the peg, something that accentuated since then. With the UST trading at 62 cents on the dollar, I think last night or the previous night. Last night it lost the peg again after kind of trying to stabilize. There is defense mechanisms that have been put into place, but they seem to struggle a lot, right? So I think yesterday, so from Monday to Tuesday, Terra and I think it's called the Luna Foundation Guard has deployed, I think, about 42,000, I think it was 46,000 Bitcoin, so about 1.3 billion worth of Bitcoin to protect the peg, but that clearly failed, right? Last night at 1 a.m. CET, it lost it completely again, completely collapsed, I think back to the 70s. What's your take on that? It's maybe also very specific to that situation and how the coin is built and the mechanism. Do you have any view on you've done a bit of work on that, I believe?
Well, for me, it's really a throwback to my graduate studies and also my work as a central banker at the ECB, because this is really these types of crises, exchange rate crises, you might want to call them. They have been studied a lot, obviously in different contexts. How I learned it, for instance, is with small open economies that peg their own exchange rate to, for instance, the US dollar. But it's really something that has been studied since the 80s. And it can be coined a balance of payment crisis. And here the essential thing to understand is that although a currency might be self-sustaining from one period to another, if the equilibrium exchange rate deviates too far from the peg, there is instantly incentive for speculators or the public, generally speaking, to attack that currency. And then, as the Luna Foundation Guard does it, you can try to defend it, but your odds are very, very, very slim. So you might think, that's just something that cannot be remediated. But indeed, there are design mechanism that would affect the Luna token that could also prevent this type of depreciation of the exchange rate that then fundamentally leads the market to break this peg. And we were vocal already yesterday about it. It's also really, I would say, heartbreaking to see how the project also puts money into this defense, because they see their main value point as exactly offering this stable coin. What is unfortunate for them is that at the end of the day, they are a small open economy, and the interest rate rise that is currently going on the US economy is just proving to be too attractive, and leads exactly to this kind of currency depreciation for a peg that cannot be defended anymore. What are solutions? I mean, obviously they can always break the peg, but my understanding of it and of the ecosystem of Luna is that most of the value comes either from transaction fee or from remuneration linked to the Luna. So once they debase their token, I think they are afraid of losing their ecosystem, and this is unfortunately what I think will happen. It's a bit. It would be good to also get a bit more color also from the Southeast Asia region on what will be the second order effect on ecosystems, so payments, reward systems that are in use. I can't really tell much about it. I don't have the insight, but I think what we are seeing here is really unfortunate and should have been avoided through proper care. Because again, these balance of payment crises are nothing new and have been studied. And there are multiple ways how you can design your governance in a fair and transparent manner, so as to avoid these types of currency depreciations.
Super interesting. I think there's a couple of things you mentioned. First of all, the attackability, right? You're vulnerable to attacks. I mean, the crypto community has definitely been one that loves a good rumor. There's been rumors saying that it's Citadel took out 100K Bitcoin loan and kind of started dumping that on the market, etc. I think there's a lot of speculation, but as you say, from a fundamental perspective, the design that it has been chosen and it's backed by macroeconomics and research that you are just vulnerable to these attacks, and in any kind of DeFi way, this is how natural selection of the best coins, the best systems and ecosystems are going to come out is by having some of these stars fall from the sky, and certainly here in a very dramatic fashion. I think if you look at also how the community was talking about Terra even 2 weeks ago, them going out as the biggest buyer and wanted to become the biggest single holder of Bitcoin to build exactly what you say, right, a collateral for the UST and for their projects. I think, and then the agenda, the ration, everything kind of shifting and falling apart very, very quickly. It's sad to see that once these forces come into play, it's very difficult to get back from it and look at the coin price overnight. I mean, it's down 80%. It's difficult to see how they're going to save it in the short term, and certainly that doesn't bode well for the long term.
Well, again, I think you can always depeg the value. It's just there's the specific about the Terra Luna project. It is the value of this entire ecosystem to offer a peg. The way in which the Luna digital currency that backs this peg is being algorithmically set just didn't protect the peg. And here again, it's not. It's something. Although your peg is sustainable in the medium term, if it's in this instant it is attackable, it will be attacked. And here the theory is very very clear. Obviously, markets, we are humans, it's a social science. There's always a story behind it. But if you design a system and you have this vulnerability, it's just a question of time. And my sense is how the Lunar Guard Foundation now has approached this topic in liquidating their reserves to defend the peg is a game that ends when the reserves are at zero, because I don't think that Luna will be able to get a loan to further to further defend this peg. And here comes also the difference between when you apply these models that are very simple to the crypto space. They are much more telling than when you apply them to real economies with interaction with exports, imports. Here, it's really the equation at the that guides this crisis. So I think this is the bottom line, and let's really be clear about it. This comes at a cost to a lot of ecosystem that put their trust also in the Terra Luna project and real lives being affected. And we will definitely also be very attentive in how this plays out for the economy.
I agree. This is just the beginning of a snowball effect for all the dApps or other projects. Anything that is built on that vision is obviously gonna now look very closely at the situation and hope for the best. But your judgment of the situation is pretty dire, if I may say. Certainly, we're going to be continuing to watch and report on the situation and understand how these type of situations can be avoided over the long term. I think, however, there's two elements. Number one is the clear need for regulation, and Yellen has come out straight away yesterday in a testimony. She was supposed to go testify anyways, but clearly saying that there is a need today to regulate stablecoins. It was very telling to see her reaction. And I think they're going to move this year. That's what they said. They want to move this year. Now, obviously, it's going to go through Congress and all the cycle. But that's the first thing. And then saying that there is a need. The other thing is you're going to have money move away from stablecoins, right, into something else, right? If stablecoins cannot provide the stability that you're looking for, and you look at selling at 60 cents on the dollar, you probably want to put your money in something else. It may be a smart contract in form of an NFT, a project. I think what has been very and I keep on saying this going around, when the tide goes away, we'll be seeing who has swim trunks on, is now that the market is really shaking and very volatile, we're going to see which projects are going to be more resilient. We're coming in here with the next, with the real project. That's our approach, to say we're going ERC 721 with real world applications. There is a product behind that is actually functioning, rather than just an algorithmic mechanism that is vulnerable to attacks in this type of situation. So that's the value proposition here on which we're working on. And maybe this as a segue to some more happy themes. Again, NFTs being the kind of happy boy club during these dire times. Few projects doing very well. Even other side who's done extremely well since the mint has come down basically at par value where it roughly came, still trading at a premium to some of the comps in terms of virtual land. I think yesterday the numbers were it trades about 20 to 50% premium to a sandbox Decentraland plot. And there's good news flow on also what companies are doing. An update from Alisher on Instagram and Meta and what they're doing in the NFT space.
Hello everyone. Sorry for my camera not working, but yeah, indeed, shifting to the brighter news, I do believe that we're on the brink of mass NFT and as a result crypto adoption, because yesterday the news broke out that Instagram users will be able to post and share NFTs as soon as this week, basically, right? And Meta's NFT move will be powered by Ethereum Layer 2 scaling solution, Polygon. And that's a great news for us because we are building on Polygon and we do believe in the ecosystem. And yeah, so support for NFTs on Solana and Flow blockchains, they will be available a little bit in the later stages, but they are coming as well. Mark Zuckerberg said that social media giant will start with Instagram and then move to Facebook. with potentially some of Meta's other products included down the line. So it's not only with Instagram, which has around 1 trillion total addressable market, right? But also to Facebook, which is even bigger and is more popular for the older generations.
And there you speak about the total addressable market size for the NFT, which is estimated to be 1 trillion. I think the numbers, they range quite widely, but that number fits in nicely with what we see and take as our base scenario, which is the Goldman GIR report, estimating that over the next 10 to 15 years, the metaverse space, the Web3 space, is going to be an $8 trillion market. So that ties in nicely into the vision, and certainly you see those major players moving into that space very quickly. I think that's extremely positive. Really happy, of course, to see Polygon being the chain of choice, in particular because we've done a lot of work on various chains and chose that one for the its scalability, its also its carbon neutral footprint, certainly compared to some others, and they're going to net zero this year. And at the end of the day, also very low transaction fees, because what you've seen in Ethereum and a lot of these projects that came clogging up the system, you need to have something that is extremely scalable. And if Meta, with I think 1.9 billion users, chooses this as a chain, then certainly it's it's a good sign and a second opinion to say, okay, these are scalable solutions for these type of applications. So great news that they're doing this. Do you have any info? So what does it mean? Are you going to be able to post your NFTs? What are you going to be able to do once that integration is done?
Right. So for now, only a handful of creators are testing the approach, right? So they're able to post their NFT as their profile pictures, and in general connect their crypto wallet, and directly send basically their NFTs to showcase to the broader audience. But in general, I do believe the timeline is 2 weeks. The general population will be able to do it as well, right? So sort of like Twitter does. So you connect your wallet to your account, and you can change your profile picture to the one that you have in your wallet. And I'm sure that I'm going to be probably one of the earliest adopters of that, and I'll be rocking my NFT as my profile picture, yeah.
Nice. And if I may also share my screen, I think all these trends, it's not only announcements. It's something that is backed by strong underlying data.
For sure.
So I think if you see my screen now, the two graphs on the right side really show that this quarter has been strong and even exceeding expectation in the last months. When it comes to decentralized exchanges, we talked about underlying drivers for this huge activity over the last 2 days, but also NFT. The space just has a lot of market depth. We see across all types of product, be it visual art, but also virtual land. There is this market depth that is really needed to sustain this kind of activity. It is also, and here again, if we can make the difference between the different bridges, or layer 2 and D apps, Polygon is leading the market.
Super interesting.
So if we see here the bridge overview, there is a solid base for it. It is diversified, and this we take this also as a protection against against market disruptions such as those that we see on the Terra Luna project. Yeah, just to give a bit of underlying data to the NFT space that is just evolving.
And this report, for everyone, you can check it out on June. It's the GeoBlock dashboard. But also we post, ad hoc, a lot of content around this with commentary. It's either updated on the June analytics dashboard or on our Discord, where we disseminate the market updates and the snippets. Thanks, of course, to Sophia on doing a great job on that front. So, probably to recap, there's some good news, there's some bad news, but there's some hope. Probably, as you say, Sophia, as you say, Alisher, so we're seeing the major companies actually doing something with real products, with real intent, with real implementation, and these are not small players, these are multi-billion groups, like, Kering and Gucci. It's Meta, Instagram, really making some power moves in that space. I think one that we didn't mention, for example, is Kraken and Exchange. They're also moving into the NFT space with a whitelist approach fairly soon. So there's some fundamental underlying trend of stuff is getting done. Obviously we have some noise, but that was expected, right? Like a lot of, we had 19,000 different types of tokens out there. There's always going to be some that are not going to succeed, some are going to be more successful than others, and some are going to fall from the sky. And this clearly we're seeing with the Terra situation, but it's probably we have some good that we're seeing some failures and some failures early on. I think
we have to learn. We have to take up the pieces, put it back together, and just improve. And just because we see a crisis, it doesn't mean that such projects are inevitably doomed. I think the most important is to learn, to improve and understand, and I think that's where we come from. We do have an understanding of why this Terra peg failed. We will also internally look at other stable coins and on their underlying both structure, governance, and also the reserves. And I think this is my bottom line, at least, that there's a lot of responsibility on any type of project that issues a token.
I fully agree. And look, I feel extremely blessed that we have expertise on board, especially with you, coming after a long career in central banking, working for the Fed, the ECB, working as a risk manager for various banking groups. So we understand what is going on also from a pure fundamental and research-based approach. So that is a fantastic to have. And as you say, all these projects bear a lot of responsibility, and it's about applying the basics ultimately. And it really works. Theory really works well in something like crypto, because you don't have all these external effects and research-based precedented effects of a bad harvest, for example, that shakes up the economy or any type like this. Awesome. With this, we're going to end this week's stream here. Thank you for all your content, for all our viewers. Thank you for tuning in. Replays are of course available. Follow us on geoblock.earth, on all various media outlets. We've got Discord, we've got Twitter. We've got a website if you want to sign up to the project, and you're going to be receiving a little bit more in-depth market color, as well as project updates on the GeoBlocks front. We are still moving closer and closer to the launch. With June still on the countdown, and it's going to be really exciting. I think the momentum is there. I think we're offering an additional value that's not out there, and a real USP based on AI, based on the digital twin, based on the visualization layers that we have, and so I'm really excited. And I can tease a little bit about some of the other projects. We've been working with some creators, extremely exciting storytelling storytellers, different types of outlets, so to say, that we're going to bring together with the launch in terms of NFT collections, in terms of drops, and also for the community, we want to just give something back. You know, a lot of people don't know what an NFT is, and it's really here for us to say, hey, this is how it works, this is how you can get involved. So we're really excited about that. Thank you for tuning in, and until next week. See you later. In terms of
bye
bye.
drops, and also for the community.